Bitcoin recently broke its previous all-time highs, and we have seen the largest green candle in the history of Bitcoin. Now, this was following the US elections in 2024. Obviously, Donald Trump was elected as president, and this had a massive surge in crypto, not only for Bitcoins, but also for altcoins. But here's the thing, most altcoin strategies fail. And this is because people focus on the wrong things when it comes to altcoin trading. A lot of people think they have to find that one altcoin that can rally 100x overnight. But as traders, we think different. We follow a proven system and find coins consistently that can outwork a strategy where we simply invest in altcoins. And today I'm going to break down my altcoin strategy that you can use even if you are absolutely new to trading. Here's the thing, we don't marry altcoins. Assets pump hard and then drop 90%.
$8 trillion. And now the market, oh! It went to zero!
We are not in the business of guessing which is the one coin that can pump overnight. We are in the business of making consistent gains. If an altcoin isn't giving us the right setup, we simply move on to the next one. It's as simple as that. We traded Trumpcoin for over 3,000% gains, but we also shorted it for 80% gains. That's our game. We make money on the way up and we make money on the way down. We've caught longs on Popcat, Link, and many others, all of which I have covered in my altcoin streams here on this channel. And it's not just meme coins. We've been shorting all the highs on Ethereum while also catching longs on Ethereum when the setup was right. This dual approach keeps us profitable in any market condition. We also caught XRP before its massive 500% breakout. Timing is everything, and we show you how to do it. This is where real explosive gains happen, and I'll show you how to let those runners run and make those meme coin-like profits. So let's get into it. My strategy revolves around 3 key pillars, and that is context, confluence, and execution. This can make the difference between making money in trading altcoins and losing a lot of money. First, I'll explain why certain altcoins pump and crash and how to make use of both. Then I'll walk you through the strategies that I use to find the best assets to trade. Next, I'll share why I believe that this bull run still has legs and how to make use of it. I'll also go over some of my top picks and the narrative that can set up for massive gains. Finally, I'll tell you the most important part on how to exit these trades when it's the right time. None of the above really matters if you don't know when to sell. So let's now get into my altcoin strategy that even you can use as a trading beginner. What I already mentioned is that my strategy consists of 3 key pillars, and that is context, confluence, and then the execution. First of all, I want to show you how we can identify a good context. For this, I want to use an example of XRP, and this, by the way, is a trade that I shared inside Chart Champions in one of my altcoin weekly updates. So, liquidity is obviously what moves the market. So when we look for context, liquidity should be a main factor to look at. That can be 2 things. Either liquidity is already taken and we can expect a move to the upside, or there is resting liquidity to the upside and we can expect the market to grab that liquidity and thus expect a move to the upside. Now, the best case example is when we have both lining up. And this is exactly what happened here on XRP. The first thing is we have seen a liquidity grab to the downside. How can we identify a liquidity grab? This is very simple. We see the market coming into that level and then closing above. This means market has taken the liquidity down here on XRP. We can mark this as finished. Now what we can identify as is that there is some resting liquidity to the upside. This is always when we have highs very close to one another, but yet the liquidity was not taken, and this is indicated by a lower high formation. This is already amazing context that the market has taken the liquidity to the downside, and we can next wait for a move into the liquidity to the upside. Now what we have to look at is the market structure. So how is market structure looking down here? After seeing that the market has taken the liquidity to the downside, we have made a higher high. So we can look at this price action right here and we can see price is closing above. That means we have a potential market structure change. Let's now continue with this price action a little bit because we are looking at a replay here and see what else do we have at around this zone. Price has made this higher high, a higher low. So when I see this, after also seeing that the liquidity was taken to the downside, I am now actively looking for confluence. And what I mentioned is that when I look for confluence, I always want to have 3 layers of confluence. So the next thing I always check is an anchored VWAP to see if we have volume lining up at an interesting place. Here, I'm going to pull an anchored VWAP from the start of this consolidation range. What I can see is that there is some confluence here around this weekly close. This previous week close and then the weekly open, I can see there's an anchored VWAP. Now that already gets me excited and interested to look for further confluence because I have to keep in mind that there is resting liquidity above, and with looking at market structure, I can expect another move to the upside. What I can see here is that we also formed a weekly level. This is the second part of looking for confluence. There is one more, which is the third one. But the second one is to look for high time frame areas of interest. This can be weekly levels, daily levels, but also monthly levels. If I check the daily time frame, I will see that there's also a daily level sitting right below the weekly. So if I now stay on the daily time frame, we can see the market structure very clearly. Once again, price was taking the highs, then forming a higher low, and we saw another move to the upside. So I still expect this to continue to the upside. As an area of interest, I have already identified 2 levels of interest, that is high time frame levels being the weekly and the daily. So this is a little bit of a zone between here, which is already lining up with an anchored VWAP. Now the third part I like to check is a Fibonacci. I also want to make sure that the level I'm looking at is having a good price location. That means I do not want to long in the middle of a range and instead look for at least the CC retest to get into a trade, which is giving me a much better risk to reward ratio. Let's have a look at this here. We can pull a CC for this local low and this local high, and we can see the CC is in the middle of the weekly and the daily. Now that means this area is a valid area of support and is a level I am interested in because not only the context but also the confluence is pointing towards a move to the upside. There's only one thing left that I need to check for me to be able to get into a trade down here. If I go back to the weekly time frame, because before every trade I have to identify, is this a scalp trade, day trade, or swing trade? In this instance, this is going to be a swing trade. I have to wait for candle closes. I can already prepare myself of where the entry is going to be, and that is going to be in between this zone of confluence here. And then I can identify a target. The first target is going to be the local liquidity. The next target is going to be this high. And then I am always interested in keeping a runner. When I get into an altcoin trade, I do not want to fold this entire trade at the take profit 1 because I still want to be exposed for if the market is experiencing a pump to the upside. So that means at my take profit 1, I am only closing 25% of this trade. At my next take profit, I am closing another 25% of that existing position size. And then, even if the market pumps to the upside, I am still exposed and have a resting position open that can lead to massive gains in the future if that coin is experiencing a pump. So let's have a look at how this is playing out. I want to focus on the execution, which is the third part. And this is where I'm waiting for candle closes. That means I want to see the area of confluence being hit and I want to see candle closes above. So let's start this replay here and see how perfectly this played out for XRP. We can see prices moving to the upside. Nothing crazy here. We are not taking this trade. Now we have hit the first area of confluence. This is already the first position I would be taking. We can see price is making a new high, testing that level again. I am staying in my trade. My invalidation is still going to be below this low. I see my second area of interest being hit and a close above. That means I'm taking my next trade. Here I have my take profit 1, 25%, another 25%, and as I explained, I want to keep a runner, and we can see how valuable it was to keep a runner because price was experiencing a 400 or nearly 500% run to the upside. Now, we can stop this replay here and imagine that you have already closed the trade down here. It would have been a nice trade. It was a 40% increase in price. But yet price had another 450% rise to the upside. So this goes to show why I always like to keep a runner and not fold this entire position size after hitting take profit 1. XRP has been an excellent example of what it can mean to have context lineup, the confluence lineup, and then also have the right execution trigger to set yourself up for massive gains in the altcoin space. This is also a difference to just buying spot on XRP and not taking profits. We as traders want to pay ourselves, we want to take profits and take every opportunity that is presenting itself. We don't care about the asset, we care about opportunities. If that means XRP had amazing context, amazing confluence, but there was never an entry trigger because we simply moved lower and we have not seen a candle close above the level, we would stay out and wait for the next level of interest on a different altcoin. In my opinion, this is giving us a massive advantage over just buying and holding XYZ altcoin. We can set ourselves up for consistent profits, not only when the market is going up, but also when the market is going down. This is something that we can do if we are simply looking at investing in altcoins. We would always lose money if markets go down. Now, I also want to show you an example of a coin where we are looking at the opposite direction, because sometimes that might be confusing. This was a very simple example of where we expected price to rise to the upside. Now I'm going to give you an example of what to look for if we expect a pullback and continued price action to the downside. For this, I want to have a look at Doge. Here, I want to explain to you why I am expecting another rotation to the downside on Doge. Remember and keep in mind all the factors of my 3-pillar strategy that I already explained. Once again, this is context, confluence, and execution. The first thing is liquidity. We want to see that price has taken significant liquidity. On Doge, this was the case up here. We have seen a very nice run to the upside. It's been going on for months and months, and now we can see price ended in a nice SFP. What else do we want to include in context? You're right, that's market structure. So what are we seeing on Doge? We have seen a move below the lows. This is our lower low. This is our lower high, and we've seen another lower low. So market structure is clearly to the downside. That means, unless I see a sign of strength, I'm expecting price to continue to the downside. Now, let's also have a look at the bigger picture here and see if there is some resting liquidity to the downside. In my opinion, we can look at some resting liquidity down here. I would like to see this 0.2 being taken out. That is too perfect, in my opinion, to be the overall low, and I expect this to be taken again. Now what I have to do, that the context is lining up, I have to look for confluences. As always, I am going to check some high time frame levels, volume levels, and the Fibonacci tool to have the 3 layers of confluence for me to say this is an interesting trade I'd like to take. Now I want to start on the high time frame levels. I can identify a weekly level sitting right here. I'm going to mark it as weekly. Then I'm going to use the fixed range tool to see if I have a volume level lining up at the same price area. If I pull this for this previous range, I can see we do have confluence around this weekly with a previous range value area low. This is always a very interesting level, especially on altcoins, because we can see price was forming a range up here. Let me draw that out for you. This was a nice range. Oh, let's pull it up till here. This was a nice range. We lost it. So this is now a previous range. And if we retest a previous range value area low, we do expect resistance to come in at this level. Now, the third layer of confluence that I always like is the Fibonacci tool, as I explained, because we want to make sure that we are not looking for trades in the middle of the range and at least want to see a pullback into the CC, or even further for us to decide of whether that is good price location or not. So let's pull a CC from this high to this low, and voila, we can see this is lining up with the weekly and the value area low again. So now we can say we have the weekly, this is 1, previous range value area low, this is 2, and the CC, this is 3. So we can conclude we have nice context with the liquidity being taken, clear market structure to the downside. We have 3 layers of confluence lining up here, and that means I am interested in a short trade at around this level. We also have interesting liquidity to the downside. I can already pre-plan how I am going to enter this trade, and this will be by a 4-hour candle close below my level of interest. My invalidation is going to be above this high here, above the point of control. So if we reach up to there, I will be out of this trade. But if I get my entry, I am targeting at least a new low following the context of this asset. Now, this is a very specific example of how we as traders can participate even if a market goes down, and even profit on markets that are moving to the downside. I've recently shared trades and even calling every single high on Ethereum, and those have been one of the most profitable trades that I have ever had. This is also something someone as simply investing in altcoins cannot do. We can participate on the moves to the upside and to the downside. Now, to conclude my strategy, what I want to give you with this strategy is a very simple approach to trading altcoins and get your feet wet and see how amazing it can be to take advantage of moves to the upside and to the downside. We have context, confluence, and execution that is setting you up for success in trading altcoins. So I hope you enjoyed this video. Follow along on this channel as we will be delivering more of these strategy videos. Let us know in the comments of what you think. Is this setup going to play out, or do you think Doge is going to have another rise to the upside? I will have a look at all of these comments, and I'm going to see you in the next videos. So thank you for watching, and bye bye.